Check it out. Hedge funds and institutions, well, they're actually buying the dip pretty aggressively. In Tesla stock, on January 19th, they bought $522 million worth of Tesla. On January 22nd, they bought $321 million. On January 23rd, they bought $335 million. On January 24th, they bought $143 million. And today, they bought $354 million while retail sold. Fantastic. In this video, we will discuss what is coming next for Tesla stock, whether or not the selling is likely to continue, or if we actually just hit the bottom today. We are going to look at hedge fund and institutional option positioning in Tesla following this 12% crash. Beyond that, we have very important economic data coming out tomorrow that will have an impact to Tesla and the broader markets that you need to be aware of. Not to mention, the Fed did something yesterday that flew under basically everyone's radar, and it could be signaling an end to quantitative tightening. A new stance of quantitative easing could be starting with the Fed, and that would be very positive for interest rate sensitive names. I can't think of one company that is more interest rate sensitive than Tesla, so presumably this is actually very good news for Tesla as well. So I want to be very clear from the start of this video. Tesla is in a very rough situation right now. Tesla has been cutting prices, sacrificing margins to hopefully help out volume growth. If Tesla is indeed guiding for low deliveries in 2024, then they're probably best off focusing on profitability, and that would just be, simply put, to not cut prices anymore, maybe even raise prices a little bit, and get back to a very profitable stance. Think about Apple. Apple has had 4 quarters, maybe 5 quarters when we hear from Apple next week, of declining revenue growth. But yet Apple has managed to become more profitable. That's why Apple stock is pretty much at all-time highs, and Tesla stock is not. So if Tesla cannot impress investors on delivery growth, Tesla may have to impress investors on margins and EPS overall profitability. If Tesla does not do that, and Tesla continues down the same path of cutting prices and or missing on deliveries, the stock's not going to perform well for a extended period of time, no matter if this is a short-term bottom or not. My inkling is that Elon, well, he hates short sellers. So if you really want to screw the bears right now, all he has to do is write on X, get on his computer or his phone and say, hey, we're no longer cutting prices anymore. Tesla is going to put profitability before production and volume growth. Tesla stock would rocket higher on that. But that is purely speculation on my part, but I think it's reasonable given that we're not expecting good delivery growth anyways in 2024. Let me know what you think about that down below in the comment section. Is Tesla going to start putting profitability before production volume growth? And I'll be damned, Tesla stock is up 0.5% now in after hours, seeing some pretty solid volume. There are some conspiracy theories out there that Elon is purposely driving Tesla's stock down so they can do a buyback. Which, honestly, that's not a terrible conspiracy theory. That logically makes some sense. Gary Black says if Tesla does not cut EV prices in the US tonight, Tesla could rebound tomorrow after today's negative 13% bloodbath with the $7,500 EV credit now off invoice. Model Y rear-wheel drive prices start at $36,490 and Model Y long range at $41,490. Check it out. Hedge funds and institutions, well, they're actually buying the dip pretty aggressively. In Tesla stock, on January 19th, they bought $522 million worth of Tesla. On January 22nd, they bought $321 million. On January 23rd, they bought $335 million. On January 24th, they bought $143 million. And today, they bought $354 million while retail sold. Fantastic. While a lot of retail investors are panicked right now, hedge funds and institutions, cool as a cucumber. I believe that's because the risk to reward profile looks a lot better in Tesla stock at $183 compared to $260. Tesla, in other words, has a lot more room to mess up at 180 than 260. Now, the Federal Reserve 21 hours ago announced that the Bank Term Funding Program will cease making new loans as scheduled on March 11th. Now, what's actually interesting is the Bank Term Funding Program is being utilized at an all-time high. $161.5 billion worth of loans that are going out to banks. Now, how this works, imagine it like this. JP Morgan, for an example, has done very well over the past 12 months throughout the banking crisis and all, because JP Morgan did not go out and buy 10 or 20-year treasuries. They went out and bought 6-month, 1-year, 2-year treasuries. So the values on those held up much better. A bank like Bank of America or Citi, they went out and they bought 10, 20-year treasuries. Now, the yields on those bonds went higher. That means the price of those bonds went lower. So now what the Bank Term Funding Program essentially is you can go to the Fed and say, hey, I bought this bond for $150. The bond's currently trading for $90 right now. I'm upside down, but I need cash. You can give your bond to the bank, the Fed, the bank of the banks, and the Fed will let you loan out money via the Bank Term Funding Program as if your bond is worth the same price as you bought it for. So it's essentially another way of providing liquidity to banks and bailing out troubled banks. So presumably this would mean we're probably going to see an end to quantitative tightening pretty soon and the Fed turn into more of an accommodative stance. Now, if the Fed does indeed start to do some form of quantitative easing, keep in mind they're running off their balance sheet about $90 billion a month. So whether that is just reduced to, let's say, $20 billion a month, $10 billion a month, or if the Fed outright starts buying smaller quantities of bonds yet again, yeah, that might be a sign of maybe something is not okay out there, but that would drop treasury yields, make bonds prices, in the analogy we just went over, more valuable. So maybe, they're not trading at $90 anymore. Maybe they're trading at $120 or $130, thus essentially bring down yields, which would be very positive for a stock like Tesla, especially your interest rate sensitive names, which that is the only thing that truly makes sense to me, just because of how utilized this Bank Term Funding Program is. Now, we have heard from Dallas Fed President Lori Logan, Fed Williams, a couple other Fed officials. They've spoke about reducing the size of their balance sheet. JP Morgan even came out and said as soon as next week, January 31st, when we hear from Powell, they will actually announce a quantitative easing stance and end their quantitative tightening. I think this is a large catalyst that has really gone under the radar as far as most investors are concerned. And look at that, Tesla stock up 0.6% in after hours. The computer must be broken. Now, we are going to have, on a serious note, very important economic data coming out tomorrow. This could be the first time in a while you're going to have under 2% core PCE on a month-over-month basis annualized for a 6-month period, meaning that if you just look at the last 6 months, the Fed has achieved their target of 2% core PCE if the expectations are met tomorrow. So core PCE price index month over month for the month of December comes out at 8:30 in the morning. In fact, all of your important economic data tomorrow comes out at 8:30 in the morning. We're expecting 0.2% month over month. If you come in at 0.2%, that's fine, that's dandy. Last month's number was 0.1%. If you come in at 0.1%, that's likely to continue to spark a, large market rally. I personally think you're probably going to get a 0.1% number, but I wouldn't be surprised with 0.2%. Anything higher than 0.2 is definitely going to be seen as some bad news. The biggest question that I have is whether or not freight, like global transport, shipping, some of these inflationary pressures are going to start making their way into core PCE prices. Back in October, this is calculated in points. So it was about 886 points or so to, ship a 40-foot container. Now it's 2,239. Do companies bite the margin there, or do they pass that cost on? We still don't know. Coming out tomorrow as well, you will get personal income month over month. I think in generalized statements, the higher the better here. I don't think the markets are going to care. I think personal income outpacing inflation is going to be positive. You normally want a little bit of outpacing of incomes relative to inflation on any given year kind of basis. So I don't think that one's too big of a deal. Personal spending month over month is definitely going to be a big one. You're expecting 0.4% month over month. Last month's number was 0.2%. I think this could actually come in around 0.4% to maybe 0.5%. And why personal spending is so important is because 70 to 73% of GDP is comprised of people spending money on products and services. So if people are spending more money, there's likely to be better GDP and better growth and better earnings. That means better stock prices. Pretty simple. It's straightforward. If you see lower spending, lower stock prices, lower economic activity, and higher chances of a recession. I think we're pretty much out of the whole wage price spiral situation. So that's why I don't think incomes matter too much. And with spending, I don't think the markets are at this point equating spending to inflation, because there's basically no inflation in goods, very little inflation in services. The only place there's real inflation is housing. And unfortunately, you might not get progress on housing inflation until the Fed actually starts cutting rates. See, I own a couple rental properties. And now, one of the rental properties I just signed a new lease on this last October. Now, theoretically, I bought the house in 2019. It's been rented ever since then. So it's been a while, and that's when rates were on the lower side. But if I were today to buy a rental property, or if I had, not refinanced or just bought it, over the last 12 months or so, I'm going to have to charge a lot for rent. Let's be honest. If rates fall and I can refinance and get a lower monthly payment, I'm not going to charge as much. And that's the bottom line to it. So yes, housing is expensive. It's expensive to buy a house because of the Fed. So rental prices are high. This seems like basic econ 101. The Fed doesn't understand this. I think deep down they do. And that's why they're probably going to start cutting rates here pretty soon. Option activity from hedge funds and institutions. Keep in mind, a lot of option activity is going to be hedging. Now, a lot of people fail to forget options were initially created and still mostly used for hedging a larger long position. So on a bad day like today, you would expect to see some bearish, option flows, because you want to hedge, right, to some degree, if you hadn't already hedged, especially following today's utter collapse of Tesla stock. I think these results are actually better than expected. So you had 2,362 orders. That is a lot. On Wednesday, for an example, you had 1,098. So this is like double what you're typically used to seeing, if not triple some days, quantity of orders. So quantity was definitely on the high side. The hedging amount, potentially, the dollar amount, was on the lower side compared to what I would expect from such an utter collapse today. You had $1.87 billion head into Tesla options with a positive order value of 40%. Again, considering Tesla stock collapsed today, I would expect to see this like basically all negative option activity, but there was a decent amount of positive option activity as well, 40% positive to be exact, 60% of which was negative today. As I said in the last video, I do think short sellers are a big reason why Tesla stock did fall 13% today, and not just, a 9% day or 8% day where we started off the morning from 195 down to 180. A lot of that was hedge funds and institutions shorting Tesla stock, and you can see what happened today. So you had 1.7 million shares that were borrowed just today and presumably sold short just today. Now you have a cost to borrow number of about 10% here. The higher the cost to borrow, generally speaking, the more demand there is to short Tesla stock. And we were at about 10% cost to borrow fees before earnings, the couple of days before earnings. And then it kind of dropped off as some people, were positioning for earnings, likely not shorting as much, waiting for Tesla's results in the earnings call, and now they're back to shorting yet again. The beautiful thing is here, if we have truly found a bottom, then some of your shorts that did take on short positions over the last couple of hours, the last day or so, are going to be in a pretty sticky situation if you do actually start to see a bounce. Tesla stock now at the time of recording this video is up 0.85% here in after hours. Pinch me, I must be sleeping. The stock is finally green for a period of time. This is after hours, so we'll see what happens tomorrow. The economic data, all of this is going to be important. But if you want to know whether or not Tesla stock has bottomed, it's actually pretty simple. So, you found a lot of support today at $180 per share. The low was $180.06 per share. You hung out there for a second, then the stock bounced, and you're continuing to bounce here in after hours. So odds are statistically good. This was a short-term bottom. Now, question is, does this turn into a longer-term bottom as well? Does the stock inevitably go under $180 per share? The biggest thing that matters, let's be honest, expectations have gotten reset. So expectations are very low for Tesla. Could Tesla's business utterly start to slow down and collapse? Of course, that's always going to be a risk, but that seems like a reasonable risk given this moment in time. That's probably priced into Tesla stock at $180 per share. Now, you do have a gap to fill potentially if we do get bad news, down to about $170 per share. This gap occurred after the earnings of April 19th, 2023. If you do get a price cut specifically, again, Tesla stock's going to fall into potentially the 160s. Without any kind of price cut from here, I imagine this is a bottom. Now, a matter of fact, this is the fourth earnings in a row. You have fallen over 9%. Now, this is the worst earnings we have had in over a year, at least the worst reaction with Tesla stock we have seen in over a year following an earnings report. Now, typically, Tesla stock is anywhere around neutral to slightly negative on the RSI, between 50 and 45 over the past 4 quarters when Tesla has reported earnings. Now, yesterday, Tesla stock was already oversold on the RSI with an RSI of about 26 heading into today's 12% decline. So Tesla is now trading with an RSI at 17.43. This is the most oversold that you have been since Elon was selling a bunch of stock in the beginning of 2023, late 2022 to finance the purchase of Twitter. What happened following that is Tesla stock proceeded to bounce around 100% or so. Is that going to happen this time around? Probably not. Again, if what happens like we talked about in the beginning of this video, Tesla starts to prioritize profitability, a bounce like that would be possible. I'm not suggesting that is going to happen, but I am suggesting unless we get bad news, the stock is overextended to the downside and a bounce is likely going to come. But whether or not 180 holds as longer term support or a longer term bottom or not, that comes down to whether or not we get more price reductions. In my personal opinion, this is probably the bottom. I doubt we're going to get price reductions at this moment in time. In fact, odds are good. Tesla might just come out and say they're going to focus on profitability in the short term over actually, pursuing ambitious growth targets, at least until the next generation platform vehicle is ultimately launched. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come join the action firsthand, check out the link down below in the description of this video for the trading community. And if you guys want to see some of what we talk about first before videos are posted, check out the X account, Michael Tyler over there. Go ahead and give it a quick follow. It costs you absolutely nothing to be a part of the action over there. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.